What's going on? If you guys are here, say what's up. And we will get in here in just a minute for our analysis. What's going on? If you guys
are hearing echoes, I apologize. I fixed it.
Okay. What's going on? All right. All right, let's jump right into it. We got 53 minutes. So whenever we have some decent movement like this, when we're looking at the market as far as directional market, because we have now been in a down direction since 26,000. So we're almost 1,000 points down here on NQ, obviously because of a lot of the tariff issues, etc. And so this is the monthly chart. And if you take a look at the monthly chart, depending on, that's where our fib is. So this is where our extension is. So upside, we still have till about 27,200 before we hit the 100% extension. So this area right here is going to be a good resistance if we get back there. The only reason I'm drawing this is because I just need to understand what's going on. And if we do end up becoming bullish again, something happens, all of a sudden the market takes off. Where is our upside target? So 27,200. And the reason why we picked this area here is because we had a hold here on the 61% on the monthly. And then this is where I want to draw my extension. So right around 27,200, that's upside target. Once the news subsides, and let's say we get some pumps back up, and then as we move into earnings as well too. So we will leave that there for now. So now let's go to the weekly. And then let's do some volume profile work here. And the reason why we like to do volume profile work is because it gives us an idea of where we have our supports from a volume perspective. Where do we have our most dominant supports from a volume perspective? If you take a look here between 24,900 or so and 23,181, there's not a ton of volume that was traded here. Which can be dangerous. And the reason why it's dangerous is because we don't have a ton of defined support levels yet, or institutional levels yet. So you can see here we have quite a bit. You can see here we have quite a bit. And you can see down here we have quite a bit. But this pocket right here, this 1,000-point pocket, is a very interesting level. And so for us, we've got to make sure, because if you remember, we had our last bounce right here, right around 24,900. So this area right here is going to need to be defended. Otherwise, we will probably see some heavier downside and could possibly go down to 24,200 or so. But between 24,300 and 24,900, there's not a ton of volume being traded here. So as we go into the smaller time frames, we'll be able to kind of more pinpoint these areas. But this is just, again, high level. What are we looking at? Where's the cliff? Like if we fall off this cliff, where's going to be the next area where we're going to see players jump in, heavy players jump in? And it's more than likely going to be this area right here. Not saying we're going to go here by any means. Not saying we're going to go here by any means. However, it's important for us to understand that this is going to be the area where we start seeing more institutional support right around this area right here. So now let's jump to the daily. So, okay, so this is the 27,200. So on the daily time frame, again, if you take a look here, right, we're basically at the volume cliff right now, right as we move into this area right here, this 25,000, 24,900 area where we bounced last. This area has to hold. This area right here has to hold. If it doesn't, then the next area we're going to see, so you see this volume cliff right here. This is from 24,800s down to 24,300s. The next support we're going to be seeing is going to be right around this area right here. And again, as we go to shorter time frames, we'll be able to pinpoint exactly where. Right now, we just want to look at where do we see our dominant levels of institutional support. And the reason why it's institutional support is because this is where we have the biggest volume being traded. Biggest volume being traded. Areas like this means that there wasn't a lot of positions being taken. Areas like this, not a lot of positions being taken. The positions were taken right here. Positions were taken right here. And positions were taken, right here. This area right here is a very good support, but we're not going to go all the way down there. But I'm sharing, this is how I look at things. Now let's go to the 4-hour. So this is a very interesting, this right here. And the reason why this is so interesting is because this is happening at all-time high. We're getting a lot of big orders being placed, especially right here, right at this top right here where we just reversed from. And so that tells me that we were ready for a reversal, and a lot of reverse positions here, a lot of people getting into short positions here. So as of right now, the market does look like we are going to continue down, just based off of from a volume perspective and where we're seeing the largest volume being played out at. It's all happened right here. This is where we have almost 2 times the volume being traded, 30-40% in some cases, right here, right at this top, which has been a heavy resistance for us. So this area right here, again, is going to be our key level if we move back up. But now the question will be, where do we look at to take trades? So let me remove the volume profile now. And let's do let's look for some institutional levels first. Okay, everybody knows when we look for institutional levels, we're looking for price displacement, high volume price displacement on the larger time frames. This area right here has been a good support for us, 24,900 area. So this is going to be probably where I would probably take a trade, and we should get a decent sized bounce. Doesn't mean it's going to hold, but I think we'll at least get a decent sized bounce here right around this 2480 to 24,900 area. We've held twice, and this will be the 3rd time we test it. And then once we test it, we'll be able to basically see, okay, are we going to hold this? Are we seeing volume and participation come in? Are we seeing divergences as we move into this area? And then that's where we want to basically take our trades as we move into this zone right here, 24,900 down to 24,800-ish area. On the shorter term, as we go into what we're looking at for intraday, so if you can see here, this is where our first trend has formed, right here. And so we're going to do some fib work to see where we have respecting of fibs. Okay, so we have fib respecting this breakaway right here. So this is the start of the gap. Down to this area right here, we held the 50%. So now what I want to look for is if I draw this as an extension, does it line up with another key institutional level that I am saying, okay, we have some really good confluence here. Okay. So right here, we have our 78%, which lines up perfectly right around 24,915. And then we have our 24.776, which aligns with this breakaway right here. Aligns with this breakaway right here. So these are the 2 levels that I would be trading to the downside. I'd be looking for 24,915. I'd be looking for 24,776. These are the 2 levels I want to watch for divergence. These are the 2 levels where I want to watch for volume participation. And this is exactly what we want to try to identify when we are seeing a decent size move down like we've seen here, especially with this huge, 300-point gap. Now, if we go to take a look at where is our current trend, which we just drew earlier, but we'll draw it again. This is our current trend. And as you can see here, this is the hourly. The hourly is very weak here. This is very weak. And even into closing, we were weak. So a break of this 25,100 will 100% get us down here to this 24,915. It's going to happen. And I know when we see market move like this, that we all want to try to catch the bounce. We want to try to catch a reversion. We want to get the 600 points back and to fill the gap. But it's not going to happen this time. Here's why it's not going to happen this time. Right away. It may happen eventually, but it's not going to happen this time right away. Too much uncertainty in the market. Too many times the word tariff has been used in the market. And stuff going on with, the central bank. There's just too much uncertainty right now for the market to feel comfortable. And that's the reason why we had a 300, almost 300 point gap down. So if I was you all right now at this point, I would be looking for how do I continue to play the short down? How do I play it down to this level right here, 24,900? How do I play it down to 24,776? Because these areas right here actually look pretty good. So I would, whether we do a pullback to here, break down here, and then we break this trend to the upside here. That's something that I would like to see play out. It looks like a decent play out. So next thing is I want to look at where can I take a short trade. So now that we've looked at long term, we know exactly where our long terms are at. Where are our short term levels here? So again, we want to look for legs. We want to look for leg movement. When did leg 1 start? When did leg 2 start? Where do we have our price separation? And where do we want to see areas where we have decent level of resistance? So this area right here is a good area of resistance. This right here, we're already on. This is a good area of resistance. This is a micro trend right here that we're trading on. If we continue to respect this, I could see us moving down here. But it's very likely we might gap up over this, maybe even to 25,170. And then if we go to the 30-minute, I'm going to clear out my chart just real quick. Our 30-minute price displacement with volume. We're looking at this candle right here. So this area right here. Nice price separation. Big volume on this candle. So I would probably say a reshort area right around 220s. And if this breaks below this 25,100, I would take the short down. Below 25,100, if we break this low, I would take that short down. But right now, I think when market opens, the thing that you want to watch for is what happens with these micro trends. And are we going to create a flag? So right now we're respecting this. So is it possible we move up here, hold this 25,200 before continuation to the downside? Absolutely. And we can also check and see where our fib retracement levels are as well too. So we have this big move down. So again, this will help you with intraday trading. Big move down. We're starting to see some separation. Where is our fib levels. And these are the areas where we want to watch for resistance, specifically this area right here, where we already have these tops from this pullback. And then this area right here, which is the one I had pinpointed earlier, right around 260 and then 224. So these are the two areas I'd be looking for shorts at. If we do break up and we just continue up for a little bit, just know that doesn't mean we're going to have a reversal. We have to create leg two. We have to create leg two. As of right now, we are only on basically on leg one of this move down here. And then if you look over here on the larger time frame, this is still leg one. We have not yet started leg two yet. So if you have any questions on any of this stuff, please let me know. But the main things that we want to look for is we want to look for the institutional levels, which we highlighted. Where do we want to have our supports at? Where do our supports line up with our extension levels? Where do our resistances line up with our retracement levels? Where do we have trends, and where are these trends breaking and where are they holding? As of right now, I would just be looking for trading with the trend continuation and trying to time your retracement levels and your supply and demand areas with those specific institutional zones. And then taking trades there. If you're going to counter trend trade, which means you want to go long because you want to try to catch bounces, I just recommend taking your trade and getting out of your trade. Get your trade and then get out of it. That's it. Like, you should just be scalping these bounces and maybe leaving a runner and then getting out of it. If we take a look at what happened today in the market, because earlier we alerted the short. I think we put the short here in chat from specific user Doritos. I'm going to take the week off. So we called the short when it was here. So right here, 25,405. That's where we took the trade, and see what I'm going to take this short. All this stuff. And so let's go over why we took that short, because I think that's more important than the reason of taking the short. So a couple things here that line up. First, we are here. Obviously, I don't need to explain this. This was previous resistance. This is a key level. Previous resistance multiple times. Okay. As price moves into these levels, we want to look for a couple things: participation, opposite direction, candlestick behavior, and divergences. Okay, so let's take a look at divergences. We have our first peak here, and we have our first peak here on RSI. We have our second peak here, then we have our second peak on RSI, which is weaker. Then as we are peaking over, we are getting weaker and weaker and weaker. So that tells us that the market, on top of us creating a cup trend. So a cup trend is what you see here. And I think I shared this right here, yeah. So I shared this morning. It's a curling trend on the top of this. And it may sound crazy to you. Okay? But it's like a cup, and we see curling all the time. Trends don't just work as trend lines that are straight, diagonal, up and down, left and right. Trends also work as kind of rubber bands within these like circular areas, and that's why there's a circular tool. If you guys look here, there is a, where is that tool? Somewhere in here. There is a arc right here. This is the arc tool. This is the curve tool. This is the double curve tool. So there's a reason why these tools are here. But if you look at, let's say you wanted to draw this, if you see things like this, I call it curling. Curling is always good when you're looking at tops and bottoms, because you see that the price, the resistance is respecting. Now we have this inverse cup, and then that's why we had our continuation. So when you start seeing these peaks, and it kind of looks like in your eyes it's respecting this curling, it's a very easy risk to reward trade. Then you align that with our RSI divergence that we saw here on the downside, right here, where we aligned our RSI divergence with also being at a key level, right, where we had previous resistance here. All of these things aligning tells us this is a good R&R trade. I need to take it. Why would I not take it? This is the trade that you take. So you've got to make sure that you're not just taking a trade based off one piece of information, you're taking it off of multiple pieces of information and understanding how trends work. And another thing that stood out here was that we have at this top, again, we have this basically head and shoulders, right? Another thing that aligns. So not only do we have a curling trend, not only do we have a supply and demand zone, not only do we have a momentum divergence, we also have a pattern telling us that it's a reversal pattern. All of these things are aligning to one thing. That's why you take the trade. It's extremely important. Let's see. Perfect. Where can I learn this type of fib? Looks amazing. It's just practice. So, fibs work not just on the long term, but they work on the short term. So they work on all legs and retracements. So you see this leg right here? High, this is a leg. Okay, that's a leg. This is the pullback of the leg. You're probably not going to use it in a shorter fashion as far as how you'll use it. I tend to use it more for larger legs, but you just play with it. Like you look at legs and then you draw it. And then you figure out what areas look good, what areas don't look good. And after a while, you start noticing nuances that just make it easier for you to draw them. But you've got to use the chart as your tester, right? Don't just stare at it and say, like, oh, well, that didn't work. Well, yeah, because we've got to practice. We've got to figure out where we want to put it. We got to figure out where the leg started, where the leg ended. These are some of the things that you have to do, and it takes time. We've got to do it over time. But there's no, I just learned just from seeing other people do it, and I just started going back into the charts and figuring out, what to do different, where to use it and how to use it. So let's go over to silver real quick, because I'm sure everybody wants to know what's going on with silver. So silver's been extremely weak. If you take a look here, it's basically maxed out at pricing. If you look at the difference between these highs up in this move up here and then these highs up in this move here, we've been exhausted on the buy side for quite some time. And the question is as well, where are we going to hold on the bottom? This seems like the best reference point that we hold right around this 86 to 87.5. So this is where I would 100% take a long position here, right around 86, 87.5. This is 100%. To the upside, let's see if we have any fib levels that are being respected. And we can trade the fibs. So no respecting there. It's tough, man, because we're kind of in the middle of nowhere. We gapped up here, and there's not a ton of stuff that you can do other than utilize first, obviously, these dominant supply and demand zones right here. But intraday fib is important. Volume profile is important. VWAP has been working really well on this. Divergence has been working really well on this. Like up here, you see here, we have this divergence here. This was the short area, as you can see here. But when it comes to like fib and some of that stuff, it's been hit or miss, and it's just been moving kind of wacky. I'd be looking at this area right here of whether we hold it or we don't hold it. And the question is, are we basically in this pennant right here? And then we're going to play in between it until we find a direction in another way. So I'm not sure. I'll be honest with you guys. I'm trying not to trade silver as much anymore. I feel like the more I've been trading silver, the more it's taken me away from watching, NQ, NQQQ, which I've understand how it moves and I understand how to pinpoint certain areas. And silver, even though it's worked out, I've also lost the most amount of money in silver. All the big days that I've had losing have all been on because of big metal losses. But to be fair, all of my 20 plus $1,000 days that I had, like 10,000 of that came from trading silver. So so to that respect, but I don't want to just gamble. I need to have a structure. So that's why I've been focused more on NQ lately, and just focusing on that piece of it. So any questions? And let me know if you have any questions. Sorry, I'm just updating something real quick. We got Michael. Carl with one. Michael with one mobile. Sorry, I'm having to fix something. Okay, I'm back. Gold. So gold again, I mean, look at this divergence, man. It's just crazy. I mean, the buying here in comparison to here, we have this trend that's being created right here. Do we see one more peak before a reversal? I do want to see us break this high one last time so that we can confirm this divergence here. But it looks ready to come back. I feel like gold has moved better than silver as far as being able to kind of look at internal indicators. So let's say here. So you see how we held this fib right here on the 61.8 from the start of this move. So let's do our extension from here and see where it puts us at. So 4838. I mean, it seems like it's far, but it's really not. 50 points. $50 right here. It looks like the extension. So I would say 4838 is a good area to target. That's based off of that fib level. Let's see if this respects here. So this respects here too at the 0.5. So let's see if this lines up with the 4838 as well. Oh no, you guys, we're right here. We're right here. This might be it. This might be it. So if we break over this 4.7, I like 50% holds better. So you see, this is the start of the move. Let me zoom in a little bit for you guys. Okay. So this is the start of the move right here. All right, we had a leg. This is the start of the leg. Leg broke. So we have this that's holding. Okay. We're right here. I think gold is ready for the short. Based on what I'm seeing right now, I would feel comfortable shorting gold. Because if you look at the extension from the start of the leg, We held the 50% right here, which I love it when the 50% holds. And then when you draw your extension, it lines up perfectly with where we had resistance today. So I would stay short under 4773. If we break over 4773, I would just watch it for continuation because we could rip here at this point now. But I'd like to see a pullback down to 4721 and even possibly 4682 before we see some more upside. So yeah, this is definitely in a good area. I want to see if anything else aligns with this area right here. Let's go to the 5-minute. We have this trend. We've tapped it for about 4 times now. We've got divergence here, continued divergence. So I'd like to see us come back to this top, and I want to see how price reacts here. So I would be short right around this area. See if we can get an opening move, push up a few bucks, and then pull back to this trend, and then hopefully break it. And as far as support goes, obviously we have this area right here. But if this trend breaks, then we're looking for where's our retracement levels at. Same thing as we did before. So let's say it's that top. The 50% lines up here, which we have a lot of decent support. So I'd be looking at this area right here for a potential long. If we hold here, break down below, come back to this 50% retracement, this is where I'd be looking to take a trade to the upside if we see divergence and volume participation as we move into this area right here. So, looks good. Do you feel it's respecting fib levels more than silver, or is it overall? So silver is respecting fib levels, but not all the time. Gold respects fib levels very well. And the reason being is because it's not as, it seems impulsive, but it's not as impulsive. So there's more swings. I've noticed there's more swings in gold that are clean. Silver does not have as many clean swings. Like it's just like lots of curling and lots of like micro trends that are like, it's just nothing clean right here in this area that we're in, right here. So at this point, you know, I don't know whether to long or to short in this area right here. We need to get into a better area, and again, nobody knows what's going to happen with the news. So with that, I think we have our 2 things. Back to NQ, which is I think what we're all watching. NQ again. This is the high. Obviously, this is the low. We could sit in between this level before continuation. That's very possible. I do think we have earnings. Earnings this week. Let's take a look. Netflix was today. Oh, was Netflix today? Did it not move the market at all? Oh, Netflix dropped by about $5. So almost 5% after hours. So that's interesting. And they had, is this right? So revenue beat was only, they beat revenue, they beat EPS. Only a 1% beat in revenue, but they still beat revenue. Netflix stocks fall after video streamer misses with Q1 outlook. So their outlook for Q1 is lower. But it's interesting how it didn't really have an impact on the market. Usually we'll see a decent, swing. So it's interesting what's happening. Tomorrow we have nothing of importance. And then Thursday we have Intel. And Intel is one of those, sympathy stocks that, because it's, chips can have an impact on other chip makers. And that's really it. And then next week, we have Apple, Microsoft, Facebook, Tesla. So next week's going to be a good week for earnings. So as of right now, I'd be looking at, are we going to hold this channel up and down? Or are we going to break this low and then go back into that zone we were in before, around 24,900, 800 area? So with that, I'm going to take a break and we shall see what happens. But thank you all for tuning in, and I will see you later.